Hi everybody, Bill Kruger with My Yellow Jersey again. If you remember last week, I talked a little bit about why I think utilizing an IUL, or an Index Universal Life Account, is a good idea for people who are involved in the real estate business or have sales jobs where you have volatile income and you have a lot of extra cash, because then you can be your own banker. And you can be your own banker to take advantage of crashes in asset prices. So I'm going to give you a little data that kind of proves my hypothesis again today as to why I think this is something you should seriously consider. So I went and looked again, and again, as you remember, there's some people that don't like this product. Susie Orman.
How long have you been watching the Susie Orman show?
A while.
A while, and how many times? How many times have you heard me say I hate universal life in the majority of the cases?
Dave Ramsey.
I have an indexed universal life with a death benefit.
Mm-hmm.
And is that I know you don't like whole life policies, but is that indexed universal life something you would keep?
No.
Don't like it. And the reason is because they look at investing over a long period of time. And over a long period of time, investing in the stock market instead of life insurance is going to get you a better rate of return than otherwise. So let's go and take a look at what the data actually says. Now, I went and looked at the data on the S&P and the Dow Jones Industrial Market over the past 30 years. And I also made the assumption that you're really good at investing, that every month when you buy your stock as part of your investment savings program, you buy at the low every month. And you're able to sell, quote unquote, every month at the peak. And over the past 30 years, your average rate of return would be 7.25%. Now, also know that if you sell stocks, you're going to have a capital gain. So right now, capital gains are at 15%. And so on an after-tax basis, you would have made 6.75%. Over the past 30 years, buying of $1,000 every month, you would have made 6.75% if you sold everything through October. Now I got my data from Yahoo. So, and then you can also tell there's also a fair wide range every month of what stock prices are. I also went and looked at Investopedia because my numbers may not be accurate. And Investopedia says that on average since 1920, the S&P has made on average again about 10% per year. That's with dividends. My analysis did not include dividends, so kind of close. And here's the chart for Investopedia. I would argue that this chart shows why you should have an investment, an IUL, and be able to be your own banker. You see how volatile those stock prices are. And with an IUL that's fully funded with a big cash value, you are able to go in and buy when prices are low. There's a lot of people out there that say, you need to be buying assets when they're at historical lows. That's where you make your money for your kids, whatever. As Chris Harlan says.
And so you want to buy when everyone's freaking out. Like if everybody's freaking out and the stock market's crashing, and you buy, and it's, I don't know, March of 2009, it's a generational low. You're going to make a fortune longer term.
And then also you have Warren Buffett.
Yes, he's the world's richest share investor. Okay, remember his name, by the way, because I'm going to come back to this guy in a few moments. So what we're going to talk about today, guys, we're going to talk about how
John D. Rockefeller.
When that happens, there'll be blood in the streets. Remember what Rockefeller said? Okay, all that means is when people are afraid.
And others that say you make generational wealth when everybody is running for the door and nobody wants to buy. The problem is when everybody's looking to sell and all your money's in the stock market, you're getting beat up just like everybody else and you don't have the cash to get in and buy it. This is where an IUL comes in. You're able to borrow against the cash value of your life insurance policy and not diminish the value of the life insurance that you have. And the rates that you get are low, and you get to make your own decision as to when you take the money out. As you know, in those types of time periods, lending becomes pretty scarce. Banks tighten their lending standards, and you don't have access to that cash. Likewise, your business may be hurting, and you need the cash for some other things. So having this on the side, ready to jump in and take advantage of things so that when the market does come back, whether stocks, real estate, or anything else that you're investing in.
Take a look at this. At the peak of unemployment in 2009, stocks went up 60%.
When those asset prices come back, you will have generated above market rate of return than the 10% that you see long run historical just investing in the stock market or in real estate. And that's why I think this is a beautiful idea for a lot of people. Finally, let's look at how an investment in an IUL behaves. From the chart over my shoulder, this is an example of a $1 million IUL policy on a 37-year-old woman with a 5-year payment plan. And as you can tell from this, you really recoup most of your investment by year 3. And by year 2, all of your premium is really going to cash value. And that is cash value that you can pull down and take advantage of either stocks, real estate, or other investments. And after the 5th year, you have no more premium payments. So during all this time period, you also have a $1 million life insurance policy with living benefits, which means that if you have a chronic illness or you develop a fatal disease, you're able to pull down some of those life insurance proceeds tax-free while you're still alive. So I hope this helps you understand why I think this is a really good investment vehicle and should be part of your investment portfolio, just like stocks, bonds, and other things, because you can be your own banker, you have access to cash, make money on it, indexed to the stock market, and you're going to be able to take advantage of significant dislocations in the market that we know will occur at some point in time in the future.
All right? It's about being prepared. If a financial storm is going to come, and there will be another financial storm, by the way. The next financial storm that comes, most people, I would say 90% of people, are unprepared.
The problem that we always have in that time, right, is we don't have the cash, or our money's already in the stock market, so we panic, we sell at a loss. This allows you to ride over the trough and have access to additional capital that you can invest and deploy and earn generational type wealth. Well, I hope this has been informative and that you learned something and it was somewhat entertaining for you. My name again is Bill Kruger, My Yellow Jersey. You can find me on Facebook or on the web at myyellowjersey.com. I look forward to hearing from you, and you all have a great day.
how to profit from a crisis, all right? So that's what we're talking about. Okay, who said this?